Yeah, PFG, we've been around for 21 years as Partners for Growth. We have a history prior to that, but as Partners for Growth, 21 years. And we are a private credit fund, a global private credit fund. And our thesis is to deploy credit facilities to largely the innovation sector, several subsectors below that, but in large part technology and supporting businesses on a global basis. And so we typically provide growth debt. And what that means is these businesses, their underlying trajectory is growing very quickly. And they need facilities to continue that growth or to support that growth. It's very hard to do that with equity without giving up a lot of control and ownership in your business. So we help those businesses grow without the excessive dilution that you might suffer from equity.
Is there a minimum amount of revenues they have to achieve before they can apply for this kind of facility?
It really depends. So we work with companies that are from software businesses to fintech, to health tech, et cetera, prop tech. Depending on their underlying businesses, our criteria is a bit different. So in some cases, in software businesses, we might say they need about 5 million in revenue USD or more. They need to be growing, good unit economics. They don't need to be profitable yet, but they need to have a path to that. And then on the fintech side, we might get involved a lot earlier. It's not necessarily a revenue threshold, it's the maturity of the underlying product that we're financing.
And how many funds do you have now under management, and what the size of the total funds you have?
Yeah, so since inception, which is 2004, we have 7 funds. We're actively deploying out of our 7th fund today. We've raised, we're managing about $1 billion under management today. We've deployed about $2 billion in commitments across 250 businesses over that time in global fashion. So we have very distributed set of employees and offices. We're everywhere from Sydney, San Francisco, New York, Miami, Brazil, and Dubai. Yeah, the GCC has become a very, very active region for us. We did our first deal here about 6 years ago. Very grateful for that deal.
Which one?
Trucker was our first deal. We did it the very sort of mid to end of 2019, just before COVID. That really opened up the floodgates, if you will, in terms of other opportunities. It was the first true venture debt, what's called venture debt facility to tech businesses in the region. That resulted in another one, and another one. Fast forward, we've done 15 deals here in aggregate over that time frame. Most of those have been done over the last 4.5 years. And we've deployed about almost 350 million US in the region, in the GCC. Largely UAE and Saudi. We don't have an allocation model from a global fund perspective. We go where we see the deals that are appropriate. We do a mix of sort of traditional facilities, but largely Sharia structures in this market.
Sharia structure.
Sharia, yeah.
Okay.
To satisfy, the entrepreneurs care about that, so we're happy to do it. But effectively, the way they use the facility, the way it's structured for their operations, it's different deal by deal, and that's the case everywhere. If something goes wrong, we work with the company to kind of figure out what to do. Aside from that, it's a loan. So unlike equity, which is permanent capital, you have to pay it back. So there is an obligation to pay it back that companies need to understand. We take a lot of care to make sure they understand it, which is why we make sure we size the facilities in an appropriate way. We don't like to give them more than they need. Okay. We take great care in customizing the facility to satisfy their realistic utilization over the next year or 2 years. They're typically 3 years in duration.
Okay.
The payback sort of profile, the underlying profile of what they pay back when differs deal by deal. Sometimes it's interest only, sometimes they're paying back principal along the way. We do have warrants typically attached to our facilities that allows us to kind of benefit from the upside that we've helped create over the course of that deal. But no, we don't typically convert.
And the check size?
Anywhere from $1 million US to 50 million US plus. Per fund, right? And we're typically investing out of 2 funds at the same time. So we can scale pretty significantly.
What was your largest deal in the region?
Our largest deal was Tabby. We had the great privilege of working with them very, very early on. Started with a very small facility. They grew very, very quickly. So ultimately, we helped facilitate what was a $350 million facility with a couple of partners of ours from the US. And then that was all refinanced with JP Morgan.